Hello guys, good morning. It's your favorite coach Larry FX Academy once again, and today we are going to be looking at one of our favorite pairs that we trade, which is the Volatility 10 index. So now on this Volatility 10 index, one thing we are going to be doing is we are going to be checking the trend of this market to be able to identify what we are going to do. But then before that, one thing I would actually like us to do is let's open this Derive MetaTrader 5 interface. You understand? Now, good. So having opened it, we'll click on Volatility 10. You can see I already have my chart marked up, and I think I'm not going to be cleaning the chart. It's just going to be the way it is, and I'll try to go about my explanation. So now on this particular pair, what can we clearly see? We can see that market has been on a downtrend, but then at this area it has broken structures to the upside, which tends to give us a bias that this price would go for a reversal before it makes a drop to the downside. You understand? So now, that being the case, we can now go down to the weekly time frame. So on the weekly time frame, you will clearly understand or agree with me that the reaction we saw on the higher time frame begins to be clearer on this time frame here. So you can see we have a low here, a high, and a new break of structure to the upside. The low was taken out, but price got in back into that area, gave a smaller break of structure. This was a reversal, and then you can see we are trying. It respected something we call another block here on the smaller time frame. Let me see if I can make it big. So it respected another block here on the smaller time frame. So we are anticipating this price to push back into this high, maybe clearing this previous high, and then we can begin to look for what would happen on this particular pair. So okay, good. So you can see what is happening. Basically, we have a break of structure to the upside, and price reacted off this other block here. You understand? Reacted off this other block zone. But then if we should add our Fibonacci from this low, which I know a lot of you want to see, if we should add our Fibonacci from this area, yes, the price is on a downtrend, but it has given us a break of structure to the upside. So that is basically what changed the bias, and price is reacting from the 0.79 level. So you can see that price is reacting from this point, is reversing to this area. So that is where we can see reversals happening around here. So that could potentially give us reactions of the market or price to this upside. Now, that being the case, I don't really want my chart to be messy, so we'll delete the Fibonacci. Another thing you can see also is the break of a trend line here. We have a trend line, and it has actually given us a trend line break and other price reactions here. Now, the major reason I came to this particular section is so that you guys can see the bigger picture. So let's go back to the chart. So this is the daily time frame, which we have there. 24 hours simply signifies daily time frame. On this interface here, which is the web interface, they don't give us much data, so that is why I actually had to go there so you guys can see what's going on that particular time frame. Now, one thing we easily saw here was this. We saw a break of trend line. Let me fix this to a good color. I like using blue, guys. So now we saw a break of trend line from this side to the downside, and then this break of trend line actually helped a lot because it helps us to be able to pick movement of price to the downside. But without any much view, this other block was so straight, like it was just very clear. This zone, it was just very clear that price would react, and actually price got into it, reacted from it, and started going to the upside, and then giving us reactions to the upside. Now, one other thing that helped us to understand this is at this point where price broke this trend line here to the upside, it also gave us what we consider our break of structure. You understand? So this was what it gave us. Even if it gave us a liquidity grab at this point, though we didn't really want to make use of that, but it's still there, liquidity grab, and then price got into this zone and reacted from here, which is still our retracement zone of a rally to the upside. You understand? So it is still our retracement zone. You can see price got into the 0.79 level, which is this area we love to see trades react from. So based on that, what are we looking out for? Based on that particular action, we simply anticipate that price gets to this high. You understand? We simply anticipate that price gets to this high, and then we put our stop loss here. But this is not what we are going to be doing, because this is 24 hours time frame. You understand? So how do we now implement getting trades on smaller time frame? You understand? How do we implement getting trades on smaller time frame? So I'll delete this and I'll delete this. Now on smaller time frame, we now first of all check the trend. We saw it was on a downtrend. On this smaller chart, it was in a downtrend. This was on an uptrend where we got a break, downtrend, then we got another break to the upside. After the break, it became clear and price was pushing to the upside and it dropped. What did we see this drop doing? If I should make it clear, you will find out that this drop basically gave us our order block reaction at this point, because the rally base drop and all of that, there are other schematics around that. So we saw that it got into this bearish candlestick, which created a reversal, a strong reversal, or pullback to the upside. Now if you are using the liquidity grab, you see that this was a liquidity grab and this was our break of structure. Now this playing out on smaller time frame, and then you see that we got our fib retracement. So when we mark it through on the smaller time frame, you see we got our fib retracement at the 0.618 level. We're expected with the other block, which is the bearish candlestick. Everything confluenced at this point, and we also got a break of trend line at the smaller zone or level. So all of these confirmations actually just aid that we are on a bullish pressure. Now, that being the case, we can now go to the smaller time frame for you to see exactly what happened or what played out on. Yeah, so for you to clearly see what played out on that on the daily time frame. So let's wait for it to load, guys. So I'm waiting for it to load. So we're just waiting for it to load. I don't know why it's taking a little bit of our time. Okay. I'll have to refresh, guys. I'll have to refresh so that we just have to, and all our markups will go away, but that's what we have to do, guys. Don't know if it's network or something else, but then it's fine. So that being the case, we understood that there was a break of trend line here, which is the most recent break of trend line, and that was this, very clean. Then we clearly saw that we'll go to the 4 hours time frame. On the 4 hours time frame, okay, I would simply adjust the trend line so that it matches well. Very good. So on the 4 hours time frame, what did we see again? We saw price giving us liquidity at this point. Yeah, this was liquidity, if we should clone it, you still find out that there's an area here, but this is the major liquidity, you understand, because this was where we got our major break of structure. Understand? So this was where we got our major break of structure. Let's go to the, so if you come here, you would see what I'm saying. So we got our major break of structure here, you understand. This was also a break of structure if we should clone it. So it's basically giving us two levels to use. So we are seeing, yeah, so this is the yeah, so this is also a break of structure here. So I don't know why on the higher time frame it's clearer, on the smaller time frame it tends to want to confuse us, you understand. So we would simply be removing this and this. So basically, one thing when analyzing the market is you actually need to be making use of the higher time frame. The higher time frame is basically key in terms of analysis. The higher time frame is key because it helps you to be able to identify moves, reactions, the proper levels to mark up, so you are able to take a profitable trade. So now we got our liquidity graph to the downside, break of structure to the upside, and then point A to point B. And what do we simply do? We mark our level here, we mark it across, and what you can clearly see is price came into this area expected as 0.618 level, which is this point, which is also reacting with another block at this point here. That is just an extra confirmation because we know that market does that, you understand. So that being the case, we would now remove that particular one, and then so this is what we now have. So what are we basically looking out for? We are looking out for price to rally from this point to hit take profit, and then price has been moving up and down, up and down. So this is how we keep analyzing to the smaller time frame until we get our entry. You understand? We keep replaying what has happened on the higher time frame down to the smaller time frame. You understand? That way you are able to understand that okay, price is reacting this way. You can make an entry in a particular form and take market reaction. So that is just it. So now we have this point here and we have this area here. So this is a clear break of trend line to the upside. You see market and price reacted through it very well. The same thing happened on the smaller time frame. Now this is the 1 hour time frame. Let's make things a little bit clearer for you guys. Now, what do you see? You see that we had, after reacting from this point here, if you cut this entry to the upside, very fine. But if you didn't catch that, there were other smaller time frames to catch here. But then if you didn't catch those smaller time frames, this is the major one you see. So what would you have done? What you would have simply done was to mark your break of structure liquidity here. This is your liquidity, your break of structure. Then your point A to point B, price reacted into this area, it has hit take profit. If you decided to keep holding, you keep rallying to the upside. Now this same character repeated itself several times here, so we'll look at all of that. I really did not intend for this video or to be long. I understand I'm passing information, but I know a lot of people don't really like to go through something of such again and again and again. So but then let's do it. So we have this area here, Fibonacci, down to this point, and what can we clearly see? So you can clearly see that price so you can clearly see that price did its rally from the 0.618 level. It rallied into this point here. So it basically, what you can see, it rallied to the upside, came back down, and then finally pushed to the upside and hit take profit. This was the first take profit, first entry. This is the second entry one could be getting, and then there's another entry that came up or came off at this area here, which is very, 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 very important that one could take. Now this is the overall take profit. So anything you are doing inside here is just you trying to look for possible more entries, or trying to look for entries for the day. Remember, this is a 1 hour time frame. Now remember, we got this. Now one other thing we can easily see is that there was a break of structure also at this point here, and then there was a liquidity grab at this point. So what do we do again? What do? We pull out our Fibonacci. We pull out our Fibonacci again, and then we plot it from the swing low to the swing high, and then we enter from the 0.618 level, which is where price got to. And what are you looking out for? You are looking out to take your trade from this particular area. Actually, we took this trade for a buy, guys, and we're still holding. It's making a reversal, but if it does reverse massively, we are going to still add more position, shooting it to this high. So now I would make sure I post this trade we took on the community section so that you guys can see it and refer to that. So now you can clearly see price reacted from this area down to this point. Very clear setup, price reacting clearly and everything. Now where's the overall take profit? Remember, the overall take profit is at this point. So we've gotten this reaction. If there's any reaction here, we can use that to rally to this upside. You understand? So this is how we are able to keep reanalyzing the price, market price, to be able to get our entry on Volatility 10 and any other markets. But this is Volatility 10 I explained for you guys. Do have a wonderful day, guys. Peace, one love. Bless.